How do you see, maybe in a positive way, Bitcoin holding the government more accountable or helping us move to a standard that is a little bit more fair and based on something that no one can manipulate or control? Or do you really worry that, the forces in power are going to make it such that privacy is pretty much impossible and everyone needs to custody with these centralized custodians so that they can kind of surveil and track your Bitcoin? Like, do you think that these forces are just going to clash and one's more powerful than other?
In an interview with investigative journalist Whitney Webb, she dove into whether Bitcoin could really hold the government accountable. Webb pointed out that if used right, Bitcoin could be a powerful way to push back against the government's reckless fiscal policies. With Bitcoin's decentralized structure, people might be able to protect themselves from the nasty effects of inflation and national debt, which often comes from excessive government spending and money printing. Robert Breedlove also raised this on his show, What is Money?
Or citizens. Moving to an incorruptible or an honest money standard makes the economics of government matter again. They can't ignore the preferences of their customers because customers keep them in business and they have to be accountable to their P&L to exist, to be a going concern in the world. The Bitcoiner argument is we just don't need counterfeiting to run the world. We need money that cannot be counterfeited. And that's what Bitcoin is.
But Webb also warned that this potential isn't a sure thing. She worried that without solid privacy measures and a real commitment to decentralization, Bitcoin could get taken over by the same folks it was supposed to challenge. If Bitcoin gets too comfortable with government-backed digital currencies or starts losing its decentralized vibe, its ability to keep the government in check could seriously weaken. So she's saying the Bitcoin community needs to stay on their toes and make sure it stays a force for financial freedom, not just another tool for control.
And you point out in your reporting that we have to also remember that even though this is a decentralized public ledger, that Bitcoin does rely heavily on energy companies and internet infrastructure, which are highly centralized, right?
Yes,
so
they are.
What do you want people to know about that?
In the interview, Whitney Webb brought up some eye-opening concerns about Bitcoin's setup. While people love to talk about how decentralized Bitcoin is, Webb pointed out that it actually leans pretty heavily on centralized systems, like energy companies and internet providers. That's a big deal because if governments or powerful corporations wanted to mess with these services, they could seriously disrupt or even take control of the Bitcoin network.
And it's actually a lot more fragile than people think, and also a lot more centralized than people think. And there's a lot of ways where they could implement unprecedented censorship of people, whether that's, financially or speech-wise, if they wanted to.
Webb also pointed out the irony here. Bitcoin's whole thing is about being decentralized, but it's still tied to these centralized systems. If there's ever a major power outage or internet disruption, both of which are at the hands of just a few big players, it could really mess with the security and reliability of Bitcoin.
That we need to be cognizant of the fact that digital assets do not live in the ether, forgive the pun. Basically, they also have physical elements to it, and people seldom appreciate the fact that if a government of a particular country doesn't really want to do things this way, they can just shut the internet.
This makes you wonder how well Bitcoin would hold up if it faced a serious attack or government interference. Webb's take is that the Bitcoin community needs to pay attention to these vulnerabilities and start thinking about how to protect the system from these kinds of threats.
I think it's, could be as high as 150,000 this year.
So double what I thought was.
Yeah.
150,000, so we're tripling at this point.
Yeah, because you've got demand improving with the ETF, and you have the supply shrinking with the halving. And if monetary policy eases, which we expect, that's supportive of risk assets. And Bitcoin's holding up. I mean, that's another reason why I don't think a drawdown is going to start that soon. I mean, Bitcoin's been rallying the last couple weeks.
While Webb was worrying about Bitcoin's fragility, Tom Lee has made some bold predictions, putting Bitcoin's future price at $150,000. He's betting on a few key factors to make this happen. First off, big players like BlackRock, Goldman Sachs, and Fidelity are all pushing for Bitcoin ETFs, which could make Bitcoin way more accessible to traditional investors and drive up demand.
Because it was 30 when BlackRock filed. It started to go up because, BlackRock's coming in. Then they launched, there was little solid news, but it hung tough. Now it went up a lot because of the flows.
This increased interest is perfectly timed with the 2024 Bitcoin halving, which will cut the supply of new Bitcoin entering the market. And as we've seen in the past, these halvings had led to significant price hikes as demand becomes more than supply. On top of that, the current economic climate could work in Bitcoin's favor. With central banks easing monetary policy and flooding the market with liquidity, more investors are looking to Bitcoin as a hedge against inflation. Lee sees all these factors coming together to support his $150,000 prediction. And if everything aligns just right, Bitcoin could even surpass that number. In a surprising twist, the US Bureau of Labor Statistics just dropped a bombshell by revising its previous job growth figures, revealing that 818,000 fewer jobs were created than we initially thought. This big downward revision throws a wrench into the idea that the US labor market was as strong as it seemed, and raised some serious questions about the real state of the economy.
That's a terrible insult to our economy, because we were seeing numbers that were okay, not great, but now we're seeing numbers that, when they're adjusted, are a disaster.
The revision covers data from April 2022 to March of 2023, showing that job growth during this period was a lot weaker than we were led to believe. This could shake things up in a big way, especially when it comes to economic policy. The Fed might have to rethink its approach to interest rates and inflation now that it turns out that the job market isn't as robust as expected. Investors and analysts are definitely going to be paying close attention to how this revised data impacts market vibes and what it means for future economic forecasts. And yet another surprising twist, Senator Cynthia Lummis is making waves with her latest proposal. She is urging the US to create a strategic Bitcoin reserve. In her view, this isn't just about jumping on the crypto bandwagon. It's about setting the country up for long-term success. Lummis believes that by holding a significant Bitcoin reserve, the US could cut its national debt in half by 2045, which would be a massive win for the economy. But that's not all. She's also convinced that this move would solidify the US as a global leader in financial innovation, ensuring that we stay ahead of the curve in the fast-paced world of digital currencies. For Lummis, it's more than just numbers. It's about securing a brighter future for generations of America and making sure that the country is well positioned to thrive in the evolving financial landscape. Tether, the company known for its popular USDT stablecoin, is making headlines with its latest announcement, a new stablecoin pegged to the UAE dirham. This is Tether's first big step into the Middle Eastern market, and it's a clear sign of their strategic push into a region that's quickly becoming a hotspot for digital assets and blockchain technology. Launching a AED-pegged stablecoin could be a game changer for the region, giving businesses and individuals a more stable digital currency that is directly tied to the local currency. This could make digital transactions and remittances smoother and more reliable, which is a big deal as the UAE ramps up its efforts to lead in the global fintech space. By introducing this new stablecoin, Tether is not only boosting the adoption of digital currencies in the UAE, but also helping to cement the country's role as a major player in the cryptocurrency world. And that's a wrap, folks. From Tom Lee's bold predictions of Bitcoin hitting $150,000 to Tether's strategic moves in expanding its stablecoin offerings, the crypto space is heating up like never before. With major players like BlackRock and Goldman Sachs getting in on the action, and the upcoming Bitcoin halving on the horizon, it's clear that the journey is just beginning. So buckle up and stay tuned. Big things are on the way.